So what do you think about that kind of behavior? Because in India, we also seeing a frenzy in IPO opportunities. Yesterday only I posted about how India is experiencing an IPO boom, where I think in 2024, there were 327 IPOs that happened in India, which was globally number one. And, everyone talks about how in India, there's not enough capital movement, but, whereas in the US, it was 33 billion or so, India was very close to it, like 20 billion dollars in terms of market movement. So, that's a big shift which is happening in India. There's a lot of frenzy around IPOs. How do you think of situations like that?
This again comes back to my point about people preferring more complex situations or exciting situations over the obvious.
Yeah.
So I'll give a simple example here. So the IPO of HDB Financial is about to hit the market very soon,
Yeah.
and the price band which is being talked about is already at a significant discount to what the stock is trading in the unlisted market.
Almost 70%
So
discount,
a
right?
very big discount,
Yeah.
right? So basically, the unlisted market is fraught with such dangers. The IPO may get either called off, or it may get listed at a far lower valuation than which we have invested in the private markets.
Yeah.
And when you're investing in the private markets, you generally don't get an absolute bargain of a deal, which you can get periodically in the public markets. It's a far more easier game, in my view, to play. So and instead of making life much more unnecessarily complex for yourself, I think it's much more easier to play on the public market game than the private market game. And the word which you use, frenzy,
Yeah.
we value investors are very wary and cautious of that particular term. Wherever there's frenzy in a particular theme or sector, that means a lot of capital is flowing into that particular industry. What does that signify? Increased competition, and increased capital leads to lower returns on capital over time.
Yeah.
That's a recipe for valuation de-rating, because more competition is coming in the industry. So you want to basically go into places where capital is flowing out of the industry and the industry is becoming more consolidated, rather than where there's frenzy in a particular sector. So you just have to be very careful.
In fact, this I can apply to even what's happening in the AI world in the private space, right? A lot of money is flooding into consumer applications or, the applications as is in today's time period, but a lot of them will get easily replaced because the advancements that we're seeing in AI will not, benefit these companies, which might currently be benefiting from the situation. Whereas the picks and shovels approach that you spoke about, those are no-brainers. But, I don't see enough capital going there versus, all the capital is getting flooded into some of these hype companies, which sometimes don't have a business model or revenue model or don't even know when they'll monetize, but the capital is just driving the growth, right? So, in private versus public, because, I have that lens of being privy to what happens in the private space also, I feel like a lot of misallocation of capital is happening just following this AI hype cycle.
Right,
Yeah.
absolutely correct. Because these picks and shovel plays are not glamorous enough.
Yeah.
People always want the hot, glamorous next big thing. That's why they get attracted to such plays. But I think investing by nature is very boring endeavor. Boring is good in investing, in my view.
Yes, absolutely. And, coming back to your book, because I think we both bonded over how some of the life principles that we share are very identical to what we've covered in the book. I would love for you to share some deep insights with the audience in terms of how they can enrich their lives by applying some of the lessons that you talk about.
Especially the core lessons or the key essence of the joys of compounding is that the best investment you can make is an investment in yourself. In the first chapter of the book, I state that today, after having successfully achieved financial independence through my passionate pursuit of lifelong learning, I can happily say that I'm a better investor because I'm a lifelong learner, and I'm a better lifelong learner because I'm an investor. So, at the same time, the lessons in the book are not restricted to only about money. This is because, compounding does not apply only to money. Social and intellectual capital also compound. Investing in yourself, in your relationships, and in your understanding of the world pays massive dividends over time. This is the big message I want readers to take away from the book, that just don't focus on one aspect of your life. Have a holistic approach to various aspects of your life. That is, how you live a very existence of fulfillment and happiness.